Hello and welcome to Jazz After Dark, everybody. How you doing? We're back again here with the 1792 small batch Kentucky bourbon here, and I shared with you this with you on the other video. 1792, 1992 Rocky Patel vintage cigar there, and a Jazz Alley 1992 coin, right? That and I still love this. I'm gonna leave this here for a while. That my daughter got for me. She knows that my favorite number is 92, and she went out of her way to find all kinds of things that were 92. But today we're talking about something different that is hopefully not going to be 92%. Gold. Gold and your taxes. All right, what do we got to know about this here? So I just want to look real quick. Gold itself, it had a great 2024, right? 26% there, so almost outpacing the S&P, right? The S&P total returns there came in, well, about the same. Okay, so we'll see how we finish, but I'm recording this here about a day before the new year. So a lot of clients are big into gold, and we got to know how you pay these taxes. I'm going to tell you some stuff here that I bet you didn't know about gold. All right, first thing first, there's that capital gains thing. Now, I'm only talking about if you owned a gold stock, like a gold miner, or you owned a gold mining ETF, or you owned something like the GLD, a proxy for gold, right? So if you owned that, it works just the same as any other stock, right? If you owned it less than 12 months, then your gain is subject to ordinary income tax. If you owned it throughout the year and for more, 12 months and 1 day, then you're subject to long-term capital gains tax. Now, this is where we start spreading out a little bit because we go, maybe there's no tax. And we say that because if you look at the long-term capital gains rates, at least for 2024, you could be a single guy who on paper had income of less than $47,000 and you'd pay zero tax on your gains from your gold appreciation. If you're married, you can almost make $100,000. Now, this is on paper, right? So however you handle your business is not up to me to decide. I'm talking about what you tell the IRS and what's reportable, right? Now, most people are going to fall into the 15% category here. If you're married between $94,000 and $583,000, you'll pay a flat tax 15% on your capital gains there. Now, remember, I'm saying if this is a stock or an exchange traded gold offering, it has a ticker symbol, right? It is not a physical asset. It is just a ticker, right? It's a series of characters. GLD, GDX, NEM, right? Things like that. Those would be, assuming you held them for more than 12 months, those are the things that would be subject to the long-term capital gains, right? If it was less than 12 months, we know it's short-term capital gains. Now, where I'm going to mess you up a little bit is for the people that are into the gold coins, or you want to have the physical gold. That was a popular thing, right? When COVID hit, people said, well, I want to have physical gold. Okay, go for it. I have no problems with people wanting to invest or protect themselves or participate in a world where maybe things got out of hand for a little bit. Okay, that's fine. So, oh, sorry, make sure that's good. So, okay, this is a different story because that's not an exchange traded asset. It's a collectible in the eyes of the IRS. And wouldn't you know it, they have a collectibles tax. Well, we're going to talk about a few things here that might screw you up. So let's say you put in $100,000 and now it's worth $200,000. Well, you have a $100,000 profit. We go back over to this slide over here and you go, well, my income falls in here, so I'm going to pay 15%. No, you don't, because you have a collectible. It's going to be 28%. I'll drink to that. Woo. So careful. That's the first thing, is if you have a physical gold coin in your possession. I'm not talking about a gold IRA. We'll talk about that in a second. But let's pretend this was a gold coin, right? And I realized that the makeup of it was so many ounces of gold or fractions of an ounce of gold. I'd like to cash it in. That's a collectible. It's a 28% tax. It's a little different. Here's where they get you. What goes first? When we're figuring out my income, does the ordinary income go first? Does capital gains go first? Short-term capital gains, collectible tax? What's the order of financial operations in the eyes of the IRS? It goes like this. You go to work, you earn money from a business, you started your business, a side hustle, whatever it is, that's your income. Great. We now have some amount, hopefully a lot for you, right? Then we go, do you have any well, a lot of other stuff too, but tonight we're going to talk about this. Do you have any collectibles? Oh, you do. Okay, that counts into it, right? So now that goes next before capital gains from exchange traded positions. So what happens there? When gold has a good year, physical gold, and you've decided you're going to sell some of your physical gold, that gets added before your capital gains do. So now let's say you have this brokerage account somewhere and you're like, oh, well, it was a good year for gold. It was a good year for the S&P, and I'd like to sell some of that too. Careful, because now you could end up paying more tax on the exchange traded stocks and whatever it is that's in your brokerage account than you would have if you just didn't sell the gold, because you've got that collectible tax sneaking its way in there beforehand, counting as essentially a gain, right? So a little bit different there. Now, you can get around some of this if you're one of these people and you want a physical piece of gold. You could set up a gold IRA. Not that tricky. We don't do them here. It's not, I'm not selling anybody on this. It's just careful. You know, you hear the TV commercials and stuff. Do your research on that one. But you could get around the collectibles tax if you had a gold IRA. Now, it's going to take a little work on your part to get that set up. But if it means that much to you and you want the sale of your gold, physical gold in the future, to be treated as income, right? Because if it comes out of the IRA, that's just income tax money, right? It's not a capital gain. Well, if your income is really low on paper in retirement or some year that you're going to do this, provided that you're over 59 and a half, then you go, well, yeah, I'm not going to pay 28% on a physical piece of this thing here, right? I'll do that. I'll set up the gold IRA. So it's an idea. It's not going to be a perfect fit for everybody, and it depends on how much you have that you're starting with there. If you're new to this and you're like, I have one tiny little coin and I want to have a bunch of other coins in the future, you're going to want to look into something like that. All right, the last thing you can do, if you have gold profits, whether they're physical gold or they are exchange traded, I keep saying that just to drive home the point that it's like, you log in, it's a ticker symbol and you buy GLD or whatever. The last thing you can do is go to other positions in your brokerage account, provided that you have them in there, and you could look for some tax loss harvesting against your gold profit. This could be against any profit, really. You could have a profit in NVIDIA, or maybe you were a MicroStrategy person and you enjoyed that ride and had a big gain or something. Bitcoin, for all it matters. I don't know. That's an asset as well. That's treated as long-term and short-term capital gains. So you deal with all that. But if you have something that you can actually use to reduce the total gain on your exchange traded gold or your physical gold, provided that you have to pay the collectibles tax for that, that's an idea. Now, you may want to look into that because, man, if you make good money, you may also be subject to the net investment income tax. So you start piling this stuff on here, all of a sudden you're bringing your total tax rate into the 50s%. We don't want that. So at the end of the day, it doesn't have to be us. We are the 66th best advisor in all of the United States, according to USA Today. So I'm just saying. But you don't have to find us. Look for someone who understands all of this and say, I'd like to work with you. Maybe a financial advisor that's like us or somebody else or whatever. It could be your brother. I don't care. As long as somebody understands this. What we don't want is for you to be sitting here going, man, I'm just chilling with Dustin, just having a little bourbon, hanging out. And you didn't realize you were going to pay 28% on your collectible gold there, or you didn't realize that now because of all of that, your income is so high that you're subject to the net investment income tax. Oh my God, maybe that's another 12%. It's like, I would rather stop that for you now. So hopefully that helps. If you have any questions, feel free to check us out, jazzwealth.com. You can schedule a call and chat with us. We have no sales pitch. Very honestly, we have no sales pitch. After all these years, you'll just call and talk to one of us, and we'll just see what you got going on. And if we can help, great. If we can point you in the right direction, we'll do that too, I promise. So enjoy the rest of your evening there. Thanks for hanging out with me. And yeah, I look forward to everything here in the new year. Yeah.